So, do we sell the rip or buy the dip? That is the question that's going to play out in the next 72 hours. AVGO would have just released their quarterly earnings statement, and we would have found out if the market was basically having hopes for one single day. Are we going to get out of extreme fear eventually this week? Or is it basically going to be an extreme fear type of market for the foreseeable future? That's what we're trying to answer today, as the market, as you read, rallied on hopes. It's not necessarily the strongest thing we want to see in the market. However, we really don't care what the headline is. We care about what the numbers are, what markets are doing, how AVGO's earnings are going to be extremely crucial today, going to affect the sentiment. The market, as you guys know, is closed now. AVGO would have reported when you guys are watching this, and subsequently we can kind of see if we get an AI boom. Especially we saw some inklings today with NVIDIA, and let's actually talk about NVIDIA real quick. Coming back above the weekly level that we discussed in the weekend deep dive. Again, link in the description below if you guys want to check that out, or at the end of the video. But looking at this, NVIDIA's now a failed weekly breakdown. That's pretty good, but also the range for the week is significantly higher. We really need to get back above 127 to confirm that this is actually a bounce and not necessarily just a dead cat bounce that's going to reverse down lower and then head to sub 100 on NVIDIA, along with other AI companies like AVGO, right? They just reported earnings. They're below their weekly lower low. However, seeing how we have basically slaughtered these AI companies, 14% on earnings weekly run, I actually don't see that being necessarily impossible. I could see AVGO going and doing something absolutely crazy, even 30% if I do say so myself, right? 30% will put us back to essentially all-time highs around 250 and really boost a lot of these AI companies that have just been extremely slaughtered. And it's going to be very important also if they mention tariffs in the markets. Again, I like the cite that we are in extreme fear. We have been in extreme fear for almost the last, let's see, we entered extreme fear on February 26th. So we've been in extreme fear for over a week now. This is extremely unprecedented considering markets don't stay in extremes. So what level we have to look at, because I know your time is precious, of where we need to look at, right? And there's two simple levels. We kind of talked them on the weekend deep dive. And that is the breakdown. We fill the gap essentially today. So now it's anyone's game. It's both the Bears and the Bulls game. Both teams are seeing things that they like. First of all, for the Bears, they're seeing lower lows. That's what they like. But the Bulls are also seeing a failed weekly breakdown at this point. However, the Bears already confirmed that we are establishing a weekly lower low versus the Bulls that have not established that we are going to close at a failed weekly breakdown. We still have subsequently 2 days to establish the weekly lower low, even though this week was basically a sell, sell, sell. And today, we'll see how it plays out. Futures were kind of muddled when I was recording this. But looking at this, I really want to get above 586. 586 is going to be the area that we want to get above. Why is that? That was also the annual close. So we want to be green on the year for the S&P and subsequently the NASDAQ as well. This is where we really want to see that the NASDAQ is going to get above 511. Now, 511 is a pretty far stretch, right? That's another 1.86%. Again, with AVGO coming out and reporting earnings, we also have Jerome Powell that will be talking tomorrow on Friday, which is going to be very crucial because we also get the average hourly payrolls. ADP, I have to warn you guys, is not a good indicator of what's going on with the economy. It is maybe a good sentiment indicator, and it coming in at 77K wasn't the greatest thing. However, they still revised the previous to 186. We've seen some crazy washouts with this. I don't know if you guys remember them reporting 1 million jobs created, and then subsequently the next report, it was like no jobs created, right? ADP really isn't a good metric. That's why a lot of people don't necessarily look at it. And subsequently, we look at the payroll numbers. So they're expecting an increase in payrolls and about private to stay about the same. We're going to start seeing some of these government layoffs coming into play, but it's going to be trickling, remember, because they're getting severances. They're not going to jump on unemployment. We'll just see the payroll numbers be affected, but we won't actually see the unemployment numbers probably 6 months from now, and it'll kind of middle out with people that are rolling off unemployment, rolling on unemployment. So again, it's going to be very, very crucial. We also have Bowman, Williams speaking, Kruger, Fed policy report, and the man, the myth, the legend himself, Jerome Powell speaking as well. It's going to be very crucial to see what he is saying what he comments on, what he chooses and chooses not to comment on. That's going to be very, very crucial as Fed expectations are moving more and more for May to be a rate cut rather than June now. Again, March is pretty cemented. We're not going to necessarily change anything radically unless we get a very coincidental report that comes out next week, which is going to be the CPI report. And we can do a little bit of a deep dive again, going back to oil, right? I love doing this with you guys, talking about oil. And we can actually, you can do this yourself. You can go back through the monthly candles and see where oil was transacting on the previous month, right? So we're going to get in March, we're getting the February report. So the blue lines are basically where the majority of transactions were in the range for February. So if we look at the week, right, this will give us a better understanding, or even let's go to the day, right? So February starts right about here, right here on this red candle. February starts, and obviously we just kind of ended. As you will notice, we transacted mainly in the lower portion of the February move, right? So we transacted in this region right here for February, which is essentially going to be negative pressure on oil prices. And if we go back to the previous February, going all the way back to where we originated this, we were seeing very, very little prices transact in the low of the candles. And usually, if you know gas prices, once gas prices go up, and they don't really move down quickly. So we got this initial jump going into February and staying. So most likely we will see energy prices be a big contributor to a negative value in the CPI report. And why I think actually that maybe there is a possibility that the Fed may have some argument about whether March is a rate cut or not. Seeing how the GDP numbers have preliminarily been coming in, they may say, hey, preemptively, we're going to be doing this because we see a slowdown or something's happening in the economy. Or they may indicate that a May rate cut and basically future rate cuts, if the data continues, to allow further rate cuts. Again, in December, we are basically all over the board. So before, we were looking at a majority saying 2 rate cuts. Now the majority are saying 3 rate cuts, with 4 rate cuts significantly on the table, how the odds are, 5, 6, and now 7 rate cuts, right? This narrative gets way, way, way more interesting. If you guys remember 2023 and 2024, when we were basically in extreme fear, they managed to take this narrative and basically run it like crazy. So if we're so fearful, and this is the best the Bears can do, right? Just recapping what they've been doing, I would like to refresh your memory. We basically gone nowhere since November 5th. That is pretty sad considering. And the danger is going to be, right, I don't want the bulls to get too cocky, that this is a head and shoulders forming right here. That do we get another rip up to the 50-day moving average, and do we basically fade the gap then? Do we basically get a rip now into basically, let's say, March, and then after March we send it down lower? Or do we basically get the rally of our lives, basically saying this is a V-shaped move that we just rally to new all-time highs? That is the question that we're going to be trying to answer, and it is simple. We need to get above 586. Once we get above 586, we need to get back to 600. If we get back to 600, blue skies ahead, and we need to continue making weekly higher highs. We need to see the NASDAQ come back and have some life in it, especially get above 520 specifically, and the Russell needs to get back above 222, the famous number, because there is a lot of people that are having buyer's remorse right now, and we need to see this V-shaped move turn into the other half of the V. Rate cuts could definitely spark that on, especially with markets, what they're doing. And the bond market is kind of indicating that, hey, we may be getting rate cuts, right? Looking at where we were, we're back to December where the Fed was expected before we got all the CPI news, right? We're back to square one. With that, we got a slight bounce right here. We just expected we may be just going sideways on the yields, but this is relief for markets. This is relief for debt markets, essentially allowing companies to borrow at lower rates, which is going to spur maybe a little bit more growth. And also, just to recap, the yield curve has done absolutely nothing. So we're not really going to get a huge move, right? Especially with banking stocks recently. I don't know if you guys saw, but Bank of America just cratered out of nowhere. So maybe an excellent buying opportunity. I think that I would stay away from Bank of America. I'm more of a JP Morgan person, especially again, rate cuts move down and how financials have basically reacted negatively to the inflationary fears, because a lot of people thought we were going to get easier rates, so therefore banks rally, right? All these different things. But the big thing I want to keep an eye on is NVIDIA for one simple reason. It's also going to tell me the fervency. And remember, March 17th, they have their new reveal, which could possibly be a new chip on deck to replace Blackwell, which will be taken as mega big news and mega big up. So make sure you follow and are subscribed to the channel to know when those videos drop, to keep you guys updated to the latest news and headlines, along with Bitcoin hitting that 91,000 wall tonight. Let's see if it can break the 91,000 wall. Throw in the comment section below if you think Bitcoin's going to break the wall, and check out the weekend deep dive linked over here so you guys can know exactly what levels you have to look at for the S&P, NASDAQ, and also the VIX and Bitcoin. We cover all that. Give you your thoughts on this, and thank you all so much for watching, and I'll see you in the next one.